Hello, welcome to BuzzByte. Today we would be looking at Bitcoin bull case scenario, and we would look at how high that Bitcoin can go up to. BTC current outperformance, especially versus asset long being considered safe, is probably the most striking divergence we have seen in the market. This is jumping off the screen of the entire asset management industry. For BTC, ETF application is obviously the main driver right now, but a significantly higher move from the level of 34k or 34.5k would make it increasingly likely that there is something else at play. So what are those drivers which is actually going to drive Bitcoin price in the short term to probably 50k or 60k, and in the long term to more than 500k? So let's look at all those drivers today, and let's analyze how is it going to drive the price of Bitcoin to that kind of a level. So first bull case driver that we are going to look at is the Fed pivoting. So if you look at the US market currently, what is happening is there are a lot of selling of US government bonds which is happening, and that's bringing the treasury yield to their highest level in more than a decade and a half. The $25 trillion treasury market is considered the bedrock of global financial system. So what is happening is there is a relentless selling of government bonds, which is having a wide range of effects. The yields on the benchmark 10-year treasury bond is moving to 5%, right, which is the level has not been seen since 2007. S&P is down 7% from its high of the year, as the promise of guaranteed yields on US government debt draws investors away from equity. So what is happening is, as the bond yields are increasing, more and more people are jumping from equity market or other market into the bond, because bond is obviously going to give them a higher rate of return. So that is another thing which is happening, which is leading to S&P 500 going down. Another thing, mortgage rate currently sitting at 8%. This is like a 20-year high, and this is weighing very heavily on the real estate prices. Higher treasury yields can curb investors' appetite for stocks and other risky assets by tightening financial conditions as they raise the cost of credit for companies and individuals. So if the Fed doesn't intervene in US treasury market, rates are going to go higher than 7%. 7% is a cliff that once passed will lead to massive consolidation of stock market P by E ratio. P by E is the price earning ratio. The longer we remain at these higher interest rates, the more likely something is going to break. Either the banking institutions will break, or there is going to be credit card default, or the housing market will crash. So Jim Bianco in his Twitter post talks about S&P 500 correcting 10% from its July 31st peak. This is the first such correction since the market bottomed on October 12th, 2022, and you can see that in the graph. Similarly, then you can see the Kobesi letter talking about in his Twitter post credit card delinquencies, which are rising at their fastest pace since 1991. And you can see there in the graph also. So how long all these things are going to last, right? Fed has to come into picture. Fed has to save the US banks. The credit card delinquencies are on the rise. They have to intervene. Otherwise, if they don't intervene, the entire market will crash. There'll be complete turmoil, right? So whether the Fed pivoting, which is basically stopping the interest rate hike, happens end of this year or early next year, it has to happen. And this is one of the biggest bull case driver for Bitcoin, because once that happens, the Bitcoin and all the other cryptocurrency markets would be on a ride. Let's look at the second bull case driver for Bitcoin, which is the spot ETF. As you know, SEC is currently evaluating 8 different Bitcoin spot ETF applications as of this video, including one from the largest asset manager in the world, BlackRock. These vary slightly in their form and structure, differing in their custodian choice, fee structure, creation and redemption process, insurance offering, and more. BlackRock, they have announced their intention to seed the ETF in October. Seeding in this context refers to the initial funding provided by a bank or a broker dealer. This funding is basically will be used to purchase a few creation units, in this case Bitcoin, in exchange for ETF shares. These shares can then be traded in the open market right from the day one of the ETF launch. The seeding process involves providing just enough funding to kickstart the. Before we deep dive into these ETFs, let's understand the difference between Bitcoin spot ETFs and the future ETFs. See, Bitcoin spot ETFs, they actually hold the actual BTC in their custody, okay? Whereas the Bitcoin future ETFs, they don't directly own Bitcoin. In the spot ETFs, provider purchases an equivalent amount of BTC and they cannot be used to, they don't short the BTC, right? Whereas in Bitcoin future ETFs, they can be used to short BTC. It's a very, very flexible financial instruments. And in spot ETFs, the prices are much closer to the market Bitcoin price. And whereas in future ETFs, the expectation of future Bitcoin price can lead to its price diverging from the spot ETF price. So this is the main difference. So far, only one future ETFs have been approved, but there have been no Bitcoin spot ETFs that have been approved so far. And SEC is currently evaluating 8 different such spot ETF applications. Let's look at what are the spot ETFs whose applications have been filed recently, right? So Altcoin Daily has posted on Twitter message saying that these are the spot ETFs which are currently whose applications have been filed. And you can see here the issuer is BlackRock, Bitwise, Invesco, Vanek, Fidelity. I think there are 8 of them. And these applications are with SEC right now, and SEC is reviewing the applications. And these application dates, you can see they vary from April to June. And in fact, the BlackRock application marks a particular change of stance by BlackRock CEO Larry Fink, who in 2017 called Bitcoin an index of money laundering. There is another post on Twitter from CoinMarketCap which gives you, for all the ETFs which have been filed, it gives you the deadline. What are the first deadline, second deadline, third deadline, and the final deadline. And if you closely look at the final deadline, most of them converge around 15th of March. Some of them are in 15th, 19th of March. Some are beyond in 19th April or even May. And these are the different Bitcoin spot ETF applications that have been filed so far. This is the company name which has filed it. So it's quite interesting because if you look at the deadline, and the SEC has to approve by this final deadline, and it all converges in March and April, and it also converges with your Bitcoin halvening in April. So Bitcoin halvening that is happening in April, it all coincide with that, and that is a major bull case driver for Bitcoin, because if these ETFs get approved, and along with that the Bitcoin halvening that happens, which reduces the Bitcoin supply, this will be the perfect bull run in 2024, and this particularly builds up a very, very strong case for Bitcoin bull run to start. So let's talk about the third driver for the Bitcoin bull case, which is the Bitcoin halving. So what is Bitcoin halving? So every 4 years Bitcoin supply drops by half. So this cycle is supposed to occur in April next year, 2024, and that's why we call it as a Bitcoin halving. So what happens when the supply goes down? So the Bitcoin has a limited supply of 21 million, right? So the rate at which the Bitcoin gets generated, that will reduce by half every 4 years. So this is next, it's going to happen in April 2024. So let's deep dive into this and what impact it will have on the Bitcoin price. Let's look into that. So you can see here on the Twitter page, Rect Capital has talked about 5 phases of Bitcoin halving. So around the Bitcoin halving, which is April 2024, what happens actually? So there is a pre-halving period, then there is a pre-halving rally, then there is a retrace which happens, then reaccumulation, and then there is a parabolic uptrend, which is the last phase of this halving cycle. So what happens in the pre-halving period? Approximately 5.5 months remain until the Bitcoin halving in April 2024. So we know there is only 5.5 months which are left. So any retrace any deeper retraces that occur during this period tend to generate fantastic return on investment for investors in the several months after the halving. So there is something called pre-halving rally, right? So pre-halving rally happens 60 days before the halving, and a pre-halving rally tends to occur in anticipation of the halving. Investors buy the hype in an effort to sell the news. Then there is something called pre-halving retrace, and this tends to occur around the halving event itself. In 2016, this was minus 38% deep, that is the Bitcoin price retraced by 38%. In 2020, a pre-halving retrace happened and the Bitcoin price reduced by or retraced by 20%. So this pre-halving retrace makes investors question whether the halving was a bullish catalyst on price after all. But this is a general thing which happens every cycle. First the retrace happened, and then the accumulation happened, and then the parabolic uprise or parabolic uptrend which happens. So after the retrace happens, this is followed by multi-month reaccumulation. So basically, if you look at the next year, 2024 April is the halving period, right? After that, it will go through probably 6 months, 8 months, or 12 months of accumulation period. Many investors get shaken out in this stage due to boredom, impatience, and disappointment with lack of major results in their BTC investment, because you don't get the immediate return. You have to wait for after the halving period. Maybe it will take 12 months, maybe 16 months, or maybe even 2 years or beyond. So accumulation period is generally, it's quite boring, because you are trying to accumulate, you are trying to dollar cost average, or you are trying to buy at a regular interval, but you are not seeing the kind of return that you would expect. So once the reaccumulation period gets over, then the Bitcoin breaks out from the reaccumulation area into the parabolic uptrend. And you can see here, this is what happened around this cycle when it happened in 2020, right? In 2020, there was an accumulation zone, right? And then it had an accelerated growth on its way. And the similar pattern you will see next year around the halving period in 2024, when the Bitcoin price will retrace to somewhere around this blue circle, and then from there, after the accumulation phase, it will go for a parabolic uptrend, and that probably will see a Bitcoin price of somewhere around 70k, or it could go even to 100k, because last time it went up to 65 or 70k around that. I don't know the exact price, but this time it is expected to reach 100k or even beyond. So let's hope for the best. So that brings us to the fourth Bitcoin bull case driver, and that is Bitcoin supply. So let's look into how Bitcoin supply will determine or will affect the price of the Bitcoin. So Bitcoin magazine has posted on Twitter that Bitcoin supply on exchanges falls to 6 years low. And you can see here in May 2020, the Bitcoin supply on exchanges was around 17%. And then in 2021, by the end of 2021, it fell down to around 15%. Okay, and then by end of September 2022, it is kind of somewhere around 13%, and today it stands at around, I would say around 11 or 11 odd percentage, right? So it is the lowest in the last 6 years. It has gone down to the lowest percentage in terms of the balances on exchange. So when you talk about percentages, the 11% basically means that 11% of the total circulated supply, 11% of that circulation is sitting on exchanges, whereas the 89% are in personal wallet, or personal digital wallets. That's what it talks about. So this is definitely quite interesting to know, because as you can see here, the supply on the exchanges are dwindling day by day, and in the future, maybe after 2 years, it could be maybe 3 or 4%. So basically, people who are holding on the bitcoins in their digital wallets, nobody is selling. That's what it talks about, right? That's what it says. That's what it means, that nobody wants to sell, right? In the future, probably nobody would want to sell. Let's look at another tweet which is from Mark Harvey, which is equally interesting. He talks about in this graph, he's talking about that total circulation, which is around 19.5 million, okay, which are in circulation right now, of the 21 million, which is the total cap or total amount of BTC which can ever be produced, right? So out of that, around 93% are already in circulation, and only out of that, even 93%, only he says that only few are up for the grab, right? Only 7% is because if 93% is in circulation, and only probably 7% of the supply is up for grab, 7 to 10%, because last slide we saw that, right? So only 10 to 11% of supply of Bitcoin is on exchanges. So that is quite interesting. And if you can look at this graph, right, the current supply is 19.5 millions coins, okay, and the current inflation is 1.7%. so this annual inflation is basically tells you the percentage growth in supply of Bitcoin annually, okay. So as the Bitcoin gets mined, that adds to the total supply. So currently it's 19.5 millions, and every year there are certain number of Bitcoins get added to the supply. So the current inflation is 1.7%, which is like, if you take 20 million, if you take 2% of that, it comes to 2% of 20 million would come to around 0.4 million, which is 400k. That is 400,000 Bitcoins are getting mined every year currently, and next year this inflation is going to drop, because you can see here this chart, or this line chart, is dropping, and it's going to almost zero by maybe 2070 or 2080 or 2060, whenever Bitcoin reaches closer to 21 million, right? So this chart is very interesting, and this basically tells you that in the period which is going to come, the demand is going to be more than supply, right? And everyone needs Bitcoin, whether they know it or no, because it's the strongest form of property a person can own. Eventually everyone will catch on this. I estimate that less than 1% of the people really understand what is it to buy Bitcoin, right? And the remaining 99% of the people who let me back up. I said less than 1% of the people truly understand about Bitcoin, and they are buying as much as supply as they possibly can, depending upon how much resources or how much money they have. They are not selling at any price. And so when the remaining 99% of the people, when they understand what Bitcoin is and how it is inflation, how it hedges the inflation, how Bitcoin is a store of value, once they realize that, and when they decide to get their hands on the remaining 7% of the supply, or whatever remains, I suppose by the time they realize it, probably there will be only 1 or 2% of the supply which is liquid in the market or maybe on the exchanges. And when they realize that, you can guess the price of Bitcoin. And I'm 100% sure the Bitcoin price will be nothing less than 500k, and probably it will go to $1 million by 2030. And that's what Cathie Wood also says of the ARK investment, that Bitcoin is surely going to reach $1 million by 2030. I hope you like this video, and if you really liked it, and if you want me to create such videos in the future, please subscribe my channel, and please thumbs up the like button. Thank you so much.